Hello everyone out there in tax land, Dan, the tax man here, tax professional with Community Tax. I hear you're thinking about starting your own business, and I think that's pretty exciting. But for any budding entrepreneur out there, whether you're taking that first leap into becoming your own boss or participating in the gig economy by driving for Uber or DoorDash or reselling things on eBay, to know the basic tax consequences of starting a new business. And lucky for you, I'm here today to teach you those basics. Now, the first item that a new business owner needs to take into consideration is getting ready to pay self-employment tax. Now, self-employment tax is a tax on top of income tax that goes towards funding the Medicare and Social Security systems in the United States. If you're an employee, you also pay a version of this tax, but your employer is the one responsible for taking it out of your paycheck and sending it to the IRS. If you are self-employed, then you are the one responsible for paying it in full. And that brings us to our next item, which is making estimated tax payments. Because no one is taking any taxes out of your check, you are the one responsible for paying the IRS, and the IRS requires self-employed persons to pay in the amount of tax that they are owing at least once per quarter. You are required to pay it as you go, one check per quarter, otherwise you can open yourself up to failure to prepay penalties. And if you're not paying in every quarter, you're setting yourself up to have a tax bill when you file your return that's too big to pay all at once, and you're setting yourself up for failure. The next item on the list is the time-honored business owner's tradition of keeping track of your business income and business expenses. If you are keeping track of these items throughout the year, what you will produce is something called a profit and loss, which once again details how much you earned in the business and how many ordinary necessary business expenses you have for that year. And creating this profit and loss is wildly important for a variety of reasons. First, it helps you determine if you're profitable or not. If you're starting a new business, you got to know if you're making money or losing money. Next, this profit and loss forms the backbone of what your tax return will have on it. And if you're going to get your tax return prepared, your preparer is going to ask for your profit and loss to know exactly what numbers to put in the boxes on that tax return. It also might be useful for other reasons. If you want to get a loan, or if you're looking for investors, they're going to want to have the financials, so it's really important to keep track of them throughout the year. Here's a pro tip. Get yourself a separate business bank account. Make sure that any income that you earn from the business goes into that business bank account. Any expenses for the business come from that business bank account. And if you need any money for yourself for personal reasons, transfer it from the business bank account to your own personal bank account. Keeping the business and your personal separate is going to make your life so much easier in the future. It's very, very difficult to untangle if it all comes out of the same bank account. So do your future self a favor, thank me later, get yourself a separate business bank account. Now, when it comes to keeping track of your business income and business expenses, you can do it the old-fashioned way by downloading your bank statements and writing it in either a notebook or an Excel spreadsheet to keep track of the categories. There's also a lot of different software options out there. QuickBooks Online is probably the gold standard, but either way, you got to make sure that it gets done, and ideally that you're getting it done throughout the year as you go, rather than saving it all till the night before the tax deadline. Now, the last tax item that new business owners think about is whether or not they should set up a sophisticated business entity like a partnership or an S Corp or a C Corp. And I'm here to tell you that there can be a lot of advantages for those entities, including tax savings, but it also costs time and it costs money to open up and to maintain those entities. And I've seen a lot of heartache with brand new business owners who set up those entities too early, and it's not worth the time or money to set them up and keep them going. So I would much rather you focus on things like getting in the rhythm of making estimated tax payments and keeping track of your business income and expenses. Leave the entity formation question to when you're a little bit more established. So I'm really excited about your brand new business, and I hope some of these tax basics will help you along the way. And if you would like to speak with a tax expert about your specific situation, give my team a call at 1-800-424-8332, or Spanish speakers out there, 888-523-6606. I hope you've enjoyed this video. If you want to stay up to date on all the latest tax news and insider tips, give us a subscribe, give us a like, or if you have a question, leave it in the comments below. You can also email me at danthetaxman@communitytax.com. Ladies and gentlemen, I am Dan, the Taxman, tax professional with Community Tax, and I will see you next time.